Welcome to Markets Now. I'm Michelle Rook with Allison Thompson with the Money Farm, and livestock futures ending lower. We were mixed in the grains today, and corn and wheat did manage to into the plus side. Corn market fairly strong. Let's talk about some of the reasons. Is this market getting concerned about weather, or was this a little bit of a demand play with pretty good exports?
Honestly, I think it's a little bit of both. On a weather side, we are looking at, like I said, a pretty wet weekend here over the Memorial Day holiday. And with that, we are also days away from hitting some final plant dates for corn. Up here, we're looking at the 25th, and then a little bit further south in some other areas that have planting yet to accomplish, it's the 31st. So those are definitely on that 2-week calendar, and that's what the trade is watching. And what does that mean going forward? Are guys still going to plant the corn? I don't know. Are they going to PP the corn? I don't know. Or are they going to switch it and plant into some soybeans? So there is a lot of different options that are circulating. And we see this every year when we start talking about PP on what that's going to look like. And ultimately, we won't know for quite some time what those acres actually turn to be, but it definitely adds speculation in the marketplace. We could see 1 million acres of corn move from corn to soybeans or go to PP. And what does that mean for yields? If it goes to PP, we're likely looking at lower yields. If they end up getting switched, we're still dealing with smaller acres on the corn side too, which could likely mean lower production as well. So there's multiple different things that are definitely being thought about in the market, and it's all speculation at this point, but it's definitely adding some risk premium to the market.
It is. And, it puts the 90 million acre acreage figure in, a little bit of jeopardy. But like you say, even if you have lower yields to offset that, let's talk about, where should we be for prices right now? We've kind of got up into this, tap into this trading range, and we can't seem to take it out.
No, we can't. Especially on the old crop side. I know there's plenty of old crop corn around, and I think that is obviously part of the problem that we're facing in the corn market is that we know there is quite a bit of corn still on farmers' hands, and they're going to have to make some decisions here in the next couple of months. A lot of deliveries on July, and then you're done with dealing with old crop contracts, and we're looking at new crop. So we are facing decisions that do need to be made here in the short term. So that is one thing pressuring the market, but we are hitting resistance levels as well. So far, we are holding some good support above moving averages. And the next point for especially old crop is going to be that 480 level. That is right around where the 200-day moving average is. So it'd be really nice to see that. And even for new crop, we've been kind of hanging out here too in the 480s. It'd be really nice to push against that $5 level. And honestly, if we get up there isn't much resistance beyond that for a ways. So we could see some further upside and some continued buying. And I have a feeling these resistance levels, especially, are going to be a point of make or break for the funds. So if we were to cross these resistance levels on either contract, I have a feeling that'll ignite another round of buying.
Yeah. So corn has gotten some help, obviously, from this rally in the wheat market. And, we're still watching these global weather and production concerns. Do we have most of that priced into this market yet, do you think?
It seems like it's wanting to at least prove that, especially over this past week. We've kind of seen a lot of back and forth trade, but also, honestly, a lot more volatility entering the market. And that's pretty typical this time of year because we are sitting ahead of the growing season. We don't know what all this global production is going to equate to at the end of the day. So, in the end, I think we are going to see some volatility remain in the market, especially as we get into the middle of June. So, we're kind of in the meat and potatoes of what production is going to do this next year. And obviously, weighs a lot on what kind of weather and how stuff unfolds here in the next few weeks. So I have a feeling we're going to be in some volatile ranges. I wouldn't be surprised to see 10-cent daily ranges on corn and even 20 to 40 cents on both soybeans and through wheat exchanges in the, over the next couple of weeks as the market just tries to figure out what this all means going forward.
Yeah, and we're looking at some round numbers, getting Chicago July contract to close above that $7 mark is pretty important. We have done that in the Kansas City wheat. Are the funds getting fed what they need to technically to keep staying in here or not?
We're getting close to it. Like I said, I'd like to see some daily closes above those levels, and I think that would really give them some juice. But until
Okay.
then, yeah, obviously we kind of know what's unknown at this point. Russia's production, we know they're still dry in the forecast. The EU is wet. We know that remains in the forecast, and there is problems developing in Australia too. So it's just weighing out how that all means and what needs to get priced in to futures at this point. And I think the market's still trying to work that out. But if we can cross some of these resistance levels with some continued weather scares coming back from the Memorial Day weekend, I think we could do it.
Soybeans, why were the soybeans not able to see any follow through buying here on Thursday, especially with the fact that we have had some concerns about southern Brazil production, but did we just hit resistance or was this some of these export disappointments?
Yeah, well, we know demand here in the US has definitely been disappointing on the soybean side. And again, not getting any confirmation of some of those sales earlier that we were rumored to get earlier this week definitely doesn't help things. And South America does remain wet, but obviously the market's pretty comfortable with current production estimates at this point. And I don't think the market's too concerned about pricing any more of that in until more is known. And to be honest with you, from what I've been hearing down there, they're still kind of in rescue mode and trying to get resources where they're needed in South America. And they're not doing a lot with their grain storage and logistical issues and things like that yet. So it's going to take time. And ultimately, it could take a lot more time than we realize. It could take weeks up to a month before we get a really good handle on what kind of production has been hit there. And we know the USDA is always a little bit cautious on making too big of moves yet. And we still have a couple weeks away from the next monthly round of USDA reports. So I think the market's taking a cautious approach here. And another thing that I think is affecting soybeans too is this possibility of seeing some more acres here in the US. If corn's reaching plant dates here, are guys going to turn some ground into soybean acres? And what does that look like going forward, especially with some slower demand here in the US? It doesn't necessarily paint a pretty picture. So I think there's a few different things that are definitely weighing on the market and keeping it kind of subdued. But until we can push through resistance levels and get some supportive news to tell us otherwise, I have a feeling we might just be establishing a trading range here for the next couple weeks.
Yeah, the July beans 1250 kind of stopped us in our tracks, didn't it?
Yes, it definitely did. That would be a good point to cross, obviously, and it leaves us a pretty wide range. I mean, 12.20 to $12 seems to be really decent support. So until we can really get some more news to go above it, it's going to be difficult to cross.
Yeah. And let me follow up on what you said about exports and demand looking at new crop because we have not sold any new crop beans to China yet. So that is a little bit of a concern, isn't it?
Yes, exactly. We haven't seen any new crop sales on the books from China in regards to soybeans. It'd be really nice to see some, and usually they do start making some this time in the year. So it's definitely weighing on the market. Obviously, Brazil's been a very big source of their beans. I know just this last month they were a huge importer of Brazilian soybeans, and rightfully so. We know they have their new crop on the market, but we also know China needs to start looking ahead for further demand needs. And we know that there were production issues in South America this past year. So do they have more supply than what the market knows? Maybe their production was better than we think it was. It all remains to be, remains to be seen at this point. So it's just kind of a waiting game until we get confirmation one way or another. But it sure would help spark the market if we could get some new crop demand from China showing up.
Hmm. And a follow up on your comment on prevent plant, we're running up into those, final planting dates. Is there more incentive this year, you think, to see PP?
There is, and I think it's definitely more beneficial to PP corn this year, given where prices are and where this winter. So I think that's going to definitely weigh on guys' minds when they're making that final decision. It wouldn't be surprising to see some more PP corn acres. I'm really interested to see where it's going to be coming from. We obviously know there's delays up here in my area, North Dakota, Minnesota, but there's also plenty of delays down south, southern Minnesota, and even into parts of Iowa. And they normally don't talk about PP down there. So that would definitely be a huge switch up if they were to actually do some PP acres. So it just remains to be seen of where it ends up. But also it's important to note that from a USDA USDA standpoint on our reports going forward for planted acres, the USDA does count PP acres as planted acres in their report. So that could definitely be something that works against us, even though those are acres that are PP'd and not going to yield a crop. They do still go into the calculations for new crop supply and demand. So it could initially hurt us. It could be one of those things where we might have to wait till this fall to really know what those numbers actually were.
Okay, we do not want to repeat a 2019, so let's hope that that doesn't happen. The cattle market, we made some new highs for the move here just yesterday, and today we're down on the close. Do you think is that just some caution before this cattle on feed report because the cash news was really good?
Yeah, exactly. I think that's exactly what's going on. It doesn't surprise me to see a little bit of backtracking ahead of a big report tomorrow afternoon to hit the market, and it has been really strong. We've had a really strong uptrend for 4 consecutive weeks. So a little bit of pullback isn't bad. And if this is really a bull market led by the cash, then we really need are some corrections and for it to keep moving. And you could make some comparisons to that to what we're seeing in the grains too. We've had a really sizable uptrend since those lows were printed earlier this winter, and we've continued to chug up. We've had corrections, but it does continue to move up. So that's really all that's needed here in the near term. But ultimately, we'll see what the cattle on feed report does tomorrow afternoon. We'll likely be trading that come Tuesday.
Thanks for joining us, Allison Thompson with the Money Farm. That's Markets Now.